Today, the Critical Minerals Institute has the pleasure of hosting a Critical Minerals Institute Tungsten Masterclass. And of course, with all the U.S. defense procurement bans and export restrictions on China, tungsten has arguably become one of the most intriguing critical minerals in the world. Christopher, I'm going to let you start by giving us an introduction to what tungsten is and why this has become, I think I read from you, one of the sexiest critical minerals in the market.
Yeah, that's a bit of an oxymoron there. But anyway, it was very unsexy for a long while. There was supposedly a peace dividend after the fall of the Iron Curtain in 1989, and we didn't need it anymore because it would be the end of wars or the end of history, as Francis Fukuyama said. But the reality is that wars keep coming around, and the West, more than most, sort of fell asleep at the wheel after it thought that it could spend the money by not only not adding to stockpiles, but by burning up its stockpiles or running them down. And so now tungsten, which is one of the heaviest and one of the hardest metals, is now one of the fastest rising metals, as the tensions over recent years have reached a boiling point. One thing to think about here is not just the fact that China restricts exports, etc. It's also that because the West, whether it's the US or Europe on one side in the Ukrainian war and the Russians on the other side, both sides are using tungsten up as we speak. And for many decades, hardly any tungsten was used at all by the militaries because they weren't shooting at anyone. And now the shooting is definitely on. And, talk of even more escalation in different areas is out there. So the stockpiles that the West's military did have are gone or being severely reduced. The stockpiles Russia had are being severely reduced. And so all of these groups need to restock what they've got. And the Chinese have pretty much like the soup Nazi in Seinfeld said, no more tungsten for you. At least no more tungsten if it's being used for what the Chinese call dual use, which is when it's used for commercial and or military purposes. And the commercial uses of tungsten are many and various, but the prime ones that, affect us and that we would know are things like knives, drill bits, machine tools, and basically an enormous amount of industry in the West, whether it's the auto industry or anything that basically cuts metal, requires tungsten on the blades to have them not wear out. Drill bits, as we know in the mining industry, are very important, and it's not just diamond drill bits. There's tungsten in those drill bits as well, and so. But the Chinese have said if it's being used for dual use purposes, that is for the military as well, they're going to restrict the exports. So you have to prove that it's not being used for military uses. And that's rather difficult for the Chinese to track. So they've just restricted the exports pretty massively, not just in tungsten, but in some other metals as well, as we know. So this created a fevered environment. And tungsten, after a very long time, has awoken from its slumbers. Its price, wallowed for a good 10 years, from 2014 through to maybe 2012. Then it started moving up a little bit, but very slowly, when many other metals were moving a lot faster. But really in the last few months, tungsten has gone vertical. And it's been flirting with the $1,000 mark. And, one of the dangers, of course, with any metal that goes up too fast is the farther it rises, the faster it can fall. But at least at this moment, tungsten's having its day in the sun.
Fantastic. And so, I remember Lewis 7, 8 years ago when you first started talking to me about tungsten. You seem to be way ahead of the market in anticipating what we would be looking for. I'm going to throw you right into it, Lewis. I was reading in your about paragraph that your flagship Sangdong mine in South Korea is expected to supply over 80% of global non-China tungsten production upon reaching full capacity. So how about we start there?
Firstly, it's very kind of you to give me the credit for 7, 8 years ago. But as my father said, may he rest in peace, better to be lucky than smart. And, in commodities and anything that's cyclical, if you become very good at something, especially in a low price environment, then at some point in a commodity's life cycle, you will be a superstar. And that's very fortunately has now occurred for all of my shareholders, which, of course, very, very excited and very happy about. I think one of the things I will just, before I just talk about Sangdong and some of the things that Chris said, I've always found tungsten sexy. And the reason is not because I ever thought that it should be price driven, but availability driven. To me, no one really cares deep down inside as a consumer what tungsten costs because you use so little of it in the end process. So it doesn't have any profound effect on its uses nor on the margin of that end product. What's more important was availability, which up until recently was readily available, so it seemed, from China. And a number of things have occurred. Chris was absolutely right. Dual use has really put a sort of a wrench in that whole debate because tungsten is used in so many different products. How do you actually prove the braking component that you manufacture doesn't end up in an armored vehicle? It's almost an impossible bar to beat. And China knows this. And I think it's very important. I think slightly differently here from the soup Nazi in that this is just business. This was always about business. China did not invest the time and the billions it's taken to develop this raw material supply chain in order to be able to blackmail the West. It was never about that. They were going vertical. They went on the same journey that we abandoned as they came in because they bought market share by bringing prices down. And 98, 99% of all tungsten mines went out of business within a 6, 7 year window in that price environment, including Sangdong. So I think we have to look at this not as an ideological battle, but as a business battle. China, 10 years ago, their downstream products were the quality wasn't the greatest. They don't innovate, but they replicate. But now their quality is in replication is as good and sometimes better than we can do in the West. And what we're asking them to do is to switch back on the taps to feed their own competitors. So, of course, from a business perspective, that doesn't make sense. In terms of Sangdong, we bought it at a time, 2015. So classic 10-year cycle to build a mine in a democracy, 8 to 10 year. What made and makes Sangdong highly unusual is that it closed in 93, not because it couldn't have competed with low price environment, but because for so many years, like BlackBerry, they were the king of kings and their customer base was exclusively to the US government. The Korean government was pivoting into a whole new industrial development. Mines were no longer a factor in that as they came into what they call their fourth industrial revolution. And there was no ideas. We knew this mine very well back in the day because, of course, the other supersized mine was Panasqueira. These were the two big dogs that existed back in the day. And there was a good, healthy, respectful relationship between these mines. Sangdong and the Korean government decided to throw in the towel. It was a new day, a new dawn, and China was always going to be available, so they thought. And Portugal, the Panasqueira mine, took the view, well, no one's going to help us. No one's going to try and fight for us. We're not going to get any help from the government. What can we do? And so we started to innovate technologies and efficiencies to allow us not to compete against China. No one can compete against the CCP. It was impossible, but to survive. And we did so. And as a consequence, and I'm a big, big believer and a big supporter of development of innovations in metals, specifically tungsten. What we ended up creating in Portugal was the world's most valuable tungsten. we are paid 20, 25% above market because these innovations, by complete chance, it was not our intention or our design, but we ended up producing this extremely high grade and very homogeneous product. And we find ourselves at this moment, we were given the opportunity to buy Sangdong. We used these efficiencies and technologies to build it. And everything we've done in Almonty was for a lower price environment. As Chris said, the price has been for almost 20 years in a price band because of the Chinese subsidies given to the mines. That price band represented a 12 to 18% margin on Chinese mines when you add the subsidy. As of last year, there was a 4-year reduction program of those subsidies culminating in last year. Those subsidies don't exist anymore. So we are going to have a correction in the price. Are we going to see this current price maintained? Who knows? I'm not, for me, I plan at a lower price of 450 to 550, but certainly I think one thing Chris skirted over, which I think is very important. This vertical acceleration of price is not unique to the West. It's actually higher in China right now. They share the same scarcity issues that we do. The difference is, for Almonty, we're 10 years ahead of them in efficiencies because, well, we never had a subsidy, so we had to be. They'll catch up, no doubt about it. But certainly they have similar supply squeezes as we do. So in many ways, this export restriction is helpful in preservation. And I think I can say this safely because I know at least 5 mines that have closed. And I also am aware of how aggressively Chinese buyers are procuring non-Chinese material, especially in Central Africa. And what's different this time is they aren't the normal players who buy. We know all the main parties, Xiamen and Jiangxi, and we know these guys. These are all single, one-person companies no one's heard of, which means almost for certain this is CCP money that they're trying to procure. So Tracy, and in terms of Sangdong's output, in its iteration in our design, we can probably get up to around 40% of non-Chinese supply, but its size and it's basically its horizontal deposit means that you can open further portals if really the end of the world comes and you've really got to pump and crank that project. But we've designed it for 2 phases, not 4. But it is technically possible to do another a phase 3 and a phase 4, if really the end of days comes.
Great reply. Christopher, do you want to comment on any of those comments from Lewis? Because I have a number of questions from that.
No, I'd agree totally. Interesting, the Chinese are well publicized as being out there in outside China trying to buy up assets, and they're very much focused on gold. They haven't really been able to snaffle many tungsten assets. The prime tungsten assets are in countries where the door can be shut on them.
Well, also, Chris, to be fair, some of them aren't very good. I mean, China's looking for longevity rather than a story. They've a lot of the projects we see now that are coming to fruition, China has spent a lot of years looking at and chose not to go ahead because this closing door is only a recent thing. They could have bought quite happily. True. So, I think they're looking for longevity and they're looking for, a genuine resource rather than just, the classic story.
Yeah.
So,
but in Central Africa, of course, they're dependent upon artisanals, and artisanals are merely scratchings.
Yeah, absolutely.
The decent assets outside China are largely identified and snaffled up by Western companies, ironically. The West is very late in the piece. Had the blinkers dropped from its eyes and had a wake-up call. But ironically, the wake-up call that's doing the damage to China now was forced upon the West by China. So it's an enormous own goal that in metals like tungsten and antimony and gallium and germanium, that the Chinese actually ended up being the ones who blew the alarm bell and woke the West up.
So let's flip to Trump, please, now, and the United States. I'm going to ask both of you the same question. Christopher, the impact on Trump's tariffs and his legislation for nationalizing the critical minerals. And then I would love, Lewis, for you to explain how Almonty is going to deal with this, because you're in some countries that may or may not be in Trump's favor, and how you're dealing with that. Go ahead, Christopher.
Okay, well, the first thing is it was Biden who brought in tariffs on tungsten. They were brought in, only a few years ago. So it was actually the previous administration that started to have its aha moment, but it wasn't much of one. I mean, they brought in the tariffs to restrict the Chinese flows so that somehow there'd be some great upflowering of production in the US. It needed more than that. And then the Chinese provided the extra impetus by these bans. But as far as what the administration is doing at the moment, we do have. It's very unfortunate this over focus on rare earths and sort of like he's like a president who can't walk and chew gum at the same time. So rare earths. He's sort of got his brain wrapped around. It's a few words that sound sexy. Tungsten, if you had to get him into too many metals, he'd get all confused. More confused. And so, that's where we are at the moment. But he is just the front of the organization. Behind it, the Pentagon has always known that tungsten was important to it. But if you tried 10 years ago to get money out of the US Congress for stockpiling of critical metals, you would have been told, no, I want a bridge to nowhere in my constituency for my voters. I don't want a stockpile somewhere of something to be useful to the country. And that is the reason why the stockpiles of everything were run down. I mean, it was only in the previous administration that they started getting rid of the helium stockpile. Really crazy. So at least that's stopped now. And the alarm bells that have rung have meant that Congress is now prepared to give money, which has been the big thing that's been lacking for 30 years. They all wanted their peace dividend to spend on getting themselves more votes, whether it was schools or bridges or roads or whatever. It was not in stockpiles. So we're very unsexy.
And of course, Lewis, you're NASDAQ listed, so the American audience is very important to you. Can you respond to that question?
Well, I think the point that you made about tariffs, tungsten is exempt from tariffs, regardless of. I mean, it's in the appendix of the White House, submissions. So they have exempted from tariffs many of these products. Tungsten, I can't speak for anything outside of tungsten, but I know that tungsten is exempt when bringing it into the US. As for the countries that fall in and out of favor, well, we're in South Korea and Portugal and Spain. To my knowledge, the US still has a pretty good relationship with all three nations, and we try, and of course Montana. But I think we try and work in countries where there are sort of good, solid legal systems. I think what Chris said was interesting. Rare earths aren't rare, but from a political point of view, it's much easier to talk about something that's readily available because then you can find an easy fix because it's all about speed of solution. Tungsten, on the other hand, is scarce both here in the West, both in China and in Russia. This is not an easy fix. And one thing that I don't think we touch upon enough is the human capital needed to even process tungsten. Tungsten is an extremely difficult metal to mine and process because it's the same density as gold and as brittle as porcelain. So you can imagine when you handle it, it's why most of the projects, or pretty much all of them that we haven't owned in the last 15 years, have bled out through essentially not being able to process it efficiently. So for our mind, we are a NASDAQ company. We're a US company now. We onshored because we felt that the bulk of our customers have a significant presence in the US. They're both American companies and also European and Japanese companies with significant infrastructure and plants within the US. I've lived in America for many years. I'm actually, despite my accent, an American. And even though, as Chris said, it's sometimes a little, all over the place, there are some very smart people working who I've met firsthand, both in the White House and in various congressional committees, who are working on solutions. This is not an easy unravel. I mean, I know you can take a Gordian knot and just cut it, but you can't do this with these things. I mean, think in the last year, how many mines in the United States have received all of their permits to start work? Or even in Europe. It's just, this is going to be a long-term program. And you have to remember, not everybody wants this. And I'm not just talking about China, I'm talking internally. the industrial base was rather happy with the status quo. They liked this idea of unearned margin they could apply to their products by cheap CCP subsidized material. They were never in a big hurry to find diversification because, well, that costs money, and God forbid you should pay market price for things. This would be just appalling. So they haven't exactly been banging the door down to support these efforts of the Trump administration. They may be taking a more a view where if you let it die on the vine, eventually the status quo the pendulum will just swing back to how it was, and this will all be a dream. We'll all wake up from it. It's somebody used the expressions to me the other day. It's like in that movie Trading Places when the guy had gone through all the misery and he woke up in his own bed and he thought it all been a dream. That's how my customers are approaching this. This is all a dreadful moment in time, but it's going to pass because, well, the solution is going to take so long. Politically, we'll all get over it and there'll be a new administration and the status quo will return. And if we have to buy finished products from China in the interim, so be it.
Christopher, I'm certain you have a comment on that.
No, I couldn't agree more. It's quite evident that just-in-time thinking, Harvard casebook studies basically meant you bought from the cheapest person always, and you never paid up for security because the product will always be there. And now the product is not there. There must be, quite a lot of sort of like nervous breakdowns in many supply or procurement departments in the military industrial complex, because they've not had really since Second World War a dilemma like this of where do they get product, because the product was always there.
But that's, Chris, that's an interesting point, Chris, because how do you actually acknowledge a problem with a metal that's so strategically, so important to national security? Then you're telling your adversaries you have an issue to produce munitions. Absolutely. You have an issue to produce semiconductors through, the tungsten gas. So it's something which you have a problem, but you can't acknowledge you have it because then you're telling everyone that you have that problem. So that also is another dynamic with strategic metals. How much noise can you really make about things that are very scarce? Rare earths are not scarce. Graphite is not scarce. Lithium is not scarce. Make all the noise you like. You have the resources. But some of these elements, tungsten being one of them, how much noise can you really say without telling your adversaries, you know what, we have a problem. We cannot produce munitions. We cannot produce semiconductors. We cannot produce cars, planes. So there's also that. Politics has become a business of optics. And if you tell people long enough, it's all right, by the time they realize it's not, the next guy's already in the job. And so you can always point the finger back. Wasn't me, he said it. So that's also something. The way that our democracies are really not designed to deal with this problem efficiently and quickly. And that we have to acknowledge. And China, of course, knows this.
So let's hit on some of the challenges we're now facing. I think you touched on the widening of the audience, Lewis, in one of your answers earlier. And Christopher, I think I'd spoken to you on how 2 family offices have reached out to the CMI in the last week, full of traders that are undoubtedly looking to buy criticals like tungsten and store them. We had a gentleman on this phone call earlier who was explaining that his daughter for Christmas gave him a cube of tungsten. How is this market going to handle the increasing demand caused by the media?
Well, reflected, I think, in renewed interest in the stocks. I mean, Lewis is like, the great survivor here. I mean, he's been doing this since the end of the first decade of this century.
All right. I'm not that old, Chris. Now, take it easy.
Well, 2008. 2007. Right. That's the end of the first. I'm not saying last century, but I've been doing these things since last century. But there's hardly anyone in the space, and if you were, you died of starvation. Lewis has been, who needs Ozempic when you've got the tungsten market, which was a real exercise in starvation. But now, companies are appearing. But this is a very interesting sector. Speaking as a mining analyst, is the only sector I know where the developers and the producers way outnumber the explorers. There are virtually no new explorers because there's hardly anything that is easy for them to get their hands on. I think there's one of the few sectors where brownfields trumps greenfields any day. If you can find a mine that's shut down because of the Chinese price competition 30, 40 years ago, they're way better to reboot them than look for some godforsaken mine in the Northwest Territories. And so people are going for past producers. As we've seen, all the mines of Almonty are past producers. The mines of most of the players that are serious are past producers. If you're looking for greenfields, you could spend a lot of time, lost in the jungles or the wastes looking for something, because what we have here is a demand that people want it, and they want it now. They don't want any 10-year time frame. They want a 10-month time frame.
I'm going to go back to the demand from the military, or the alleged demand from the military. Lewis, I suspect you're getting outreach from a number of international countries having to do with their military demands. And Christopher actually asked me earlier how you're planning on fitting in with the rearmament goals of South Korea and Japan, for instance. Can you comment on any of this?
Well, I think it's worth pointing out that every conversation I've had that's not covered by NDAs, they don't talk about defense, they talk about national security. Because I think we're very quick to say, well, of course, with munitions, you need tungsten. But there are so many other uses for tungsten that cover international security that when governments talk to you, they talk about an umbrella of sectors that are essential to the functioning of that country. Because munitions is part of it. Armor is part of it. Then, of course, you've got the actual vehicles. You've got so many different components, the semiconductors. So they always talk about an umbrella of national security. And it depends which country you speak to, whether they pivot more towards defense items or more towards technology items, depending on who they don't want to upset. So, for instance, in South Korea, they're much more focused on national security around semiconductors. This is a key part of their thinking. Whereas in the US, of course, they're pivoting much more around defense items. So there's not one size fits all. The unfortunate thing, as Chris said, is that brownfields obviously have become front and center. But we have to remember that back in the 50s, tungsten was more valuable than gold. And every man and his dog was mining it. And mining it in a way that was not looking to the future, but just to get out as much of out of the ground as quickly as possible to make as much money as possible. And tungsten projects traditionally were never very large. We know the mine we just bought in Montana, and it's actually in US terms a big mine, but it was never, even when it was open, it was just bordering slightly above artisanal. And it was considered back then, it was supplying into the DLA, it was working with General Electric. It was, because you need so little tungsten, the world's production is somewhere between 84 and 98,000 tons a year globally, of which 50% is consumed in China. The US consumes somewhere in the region of 10,000, 11,000 tons a year of tungsten oxide. That's it. So these mines were always small. So these brownfields, many of them, unfortunately, I think there's one other thing you have to consider with these mines. There are two sides in mining. There's the big mining companies that have become bookkeeping exercises. They're not creative, they're not nimble, they're just essentially a bookkeeping machine. They extract their copper, they extract their iron ore, they look to inflate their margins and compress their costs. That's it. And then you have the niche metals. Now, nobody knows anything about niche metals because no one's been in it for 30 years. So junior miners come into the fray. And junior miners aren't, with the greatest respect, perhaps the greatest sort of guardians of these assets. They raise money, they spend it, they do conferences, they get drunk, and shareholders get burned out. That's pretty much the cycle. So we're trying to base our strategy of diversification from China with these niche small mines in the hands of players who perhaps have very limited experience and knowledge of how to even design them, open them, and operate them. And that's coming back to the human capital. So that's another thing to consider. Until the industrial base, and I'm not talking government money. I saw Japan and South Korea in 2008, the financial crisis, deploy billions of dollars trying to build a supply chain. They lost all their money. A lot of Canadians and Australians got rich, but were not successful. Until the industrial base and the free market money comes into this, building a supply chain, big or small, is going to be very difficult. And I think the only way we get that is through some level of price transparency, or at least some levels of price floor pricing that's universally applied across, say, the G7. Until you get that, it's going to be very difficult to see these mines come to real fruition. Because once they're being assessed by the free market, by free market capital, the free market capital is much better at deciding whether a project is worthy or not, irrespective of who owns it.
Christopher, comments on free market transparency on prices. And then why don't you step right into the human capital? I'm interested, for instance, Lewis, on where you are finding these experts to produce these past producing mines.
Yeah, the capital markets, failed the tungsten space massively. But what could the capital markets do when the prices were so paltry? There was a tungsten boomlet between like 2010, maybe 2014. But then, in that time, there were actually then more explorers than producers, because producing didn't make you any money back then. And exploring did. Well, at least it paid for the type of junkets and booze ups that Lewis was referring to. Lewis was a producer then, but he was almost, the last of the Mohicans. Whereas these explorers, they all wilted and they evaporated in 2014 when the price took a dive. The price was never like it is now. The price now is a good price.
But what about pricing transparency systems? I know in Africa, for instance, they developed a huge association to come together to help create that standard. Is there something that you're aware of, Christopher, that we may or may not be aware of at this time?
Well, then you have to go to really the LME and get the LME to do something. The LME has had a bad experience, and they've been poor operators, frankly, when they dived into the cobalt market and the moly market at the end of the, like 2009, they went in there. They almost ruined the markets by actually applying transparency. We do need transparency. At the moment, some of these thinly traded critical minerals, lots of nod, wink, wink in the pricing mechanisms, and then behind all this, and for a long time, you've had Chinese disinformation. Or we're selling a lot of material into the market. No, they'd sell a little bit into the market, but they would sink prices dramatically on small volumes, and you had gross price manipulation across a whole bunch of these liquid metals. You had the Fanya exchange scandal and all that type of stuff. There's been a lot of manipulation of the tungsten price, and there was really only one party that was manipulating it. Now, really, as the growth of production outside China is rising, you've got more players that can influence the price in a different way. And that's what I think we're seeing now. The Chinese are losing control of the prices of antimony, of tungsten, and rare earths is the big one. And they're losing control of them. They may sort of look, and people may, people still think
Chris,
control, but they have to deal with other parties now, which they.
I think that's a good point. I mean, I think what we had was, and this was in fact enabled by the Western industrial base. In China, if you wanted to build a tungsten mine, you had to also apply for an APT, a downstream plant. That was a condition. You could not just build a mine on its own. And so what happened in China was that you had on paper this huge capacity of APT, but there was no way to feed it. But the industrial base were always pointing to it. Look, prices are low because they can flood the market anytime they felt like. What we've seen in the last 3 years, as they've moved away from the subsidies to try and bring free market approaches to these mines that they have left, to bring those efficiencies of management of resource, is they never had the material to feed all of this capacity anyway. It was all a big, smoke and mirrors campaign to part of the price control mechanism. But I think when you ask me about human capital, where do we find them? Well, we don't. We have, only two mines survived the culling in the 90s. One was a Portuguese mine and one belongs to Sandvik in Austria. It was part of a supply chain, so it was more of a cost center than a standalone mine. They were the only two that survived this bloodbath. And so we have 5 generations of knowledge, but we have our tungsten technology sensor and we have our apprenticeships. We try and maintain that knowledge, and it's not easy because, people don't really want to work in mines per se anyway. And now we have to find them in Portugal and bring them in and then train them. We have a very low turnover. They're obviously solicited by many of the new players with the huge offers, but they choose to stay with us. But what we've done in Korea is that we have a high level of automation in the plant because we're using flotation. We're trying to embrace a more AI approach to minimize or at least try and mitigate the risk of trying to find that human capital. And that's, Sandvik have done the same thing in their plant in Austria. But finding that human capital, there's no consultant we can go to for tungsten. There's no book we can check. We have one guy within Almonty who spent the last 20 years doing nothing but researching every project on the planet, every process, every data dump he can find, every old Soviet archives. I mean, we've always tried to keep learning, but the knowledge is gone. It's really that poor. I mean, Chris said we open brownfields. Well, that's because that's our skill set. Our skill set is building something where we have data that existed beforehand and to see that we can replicate it and do it, and if we can do it more efficiently. That's how we mitigate our risk. We play to our strengths.
Can you speak? You were touching on innovation earlier. Can you speak to the technology for extraction, for instance? Because I know with rare earth elements, it's quite sophisticated, and it takes 4 or 5 stages to get it from exploration to an actual product.
Oh no, tungsten.
What about tungsten?
No, tungsten is a question of sensitivity. It's the way that we mine tungsten is traditional. The way that we process is either gravity or flotation or a combination of both. None of these are used liberally through many different metals, so that we don't do anything. We can't say, "Oh, we're pioneers." What we are very good at in our efficiencies and our innovations is how to manage the sensitivity of the management of that process. We understand it's very brittle. We understand that humidity changes, flocculant changes, water rate, hardness of water. We understand the sensitivities of working with a mineral that is extremely uncooperative in being extracted from the ground. We don't need heavy chemicals. It's an inert process. It's about experience and knowledge. You can't learn not true. Portugal has the highest levels of gravity recovery in the world for gravity plants. We average somewhere in the region of 74 to 78%, which is unheard of. But we didn't do it overnight. It took them 40 years to get that good. So it gives you an idea that we're constantly trying to do better, but it's about the sensitivity. That's another problem if you're an investor when you look at a junior miner. Because on paper, I can make everything look good. Oh, I was doing this, I was doing that. It's just a standard flow sheet. There's no problem. It's easy. You can do it this time next week. But it's about the sensitivity of these things. And that's where our efficiencies came in. We've developed, ideas. For instance, I can't tell you everything because a lot of it's proprietary, but we've combined some processes together, which of course no one else does on our gravity tables. work with our milling, how we crush it through the three stages, some of the adjustments, that some of the modules that we installed ourselves on Met's order tech equipment. So that's what we've done. We've looked for areas to increase our control of the management of the throughput of that product.
Christopher, I know there are a lot of companies that are writing on paper, as Lewis commented on, about entering the tungsten race. Can you tell us about any other companies that may be, coming on board that we should all be watching as well?
Well, I wouldn't say that there are many, because they're stymied. This is not like rare earths where we suddenly went from one or two to 200 in the space of less than a year. This thing is very resistant to new entrants. There are a couple of parties in the space who have very large projects on the drawing board, but those projects have been on the drawing board for over a decade now. And to get them off the drawing board is going to require these prices to remain at very high levels for a very long time, because the amounts of money that are required are eye-watering. And very interesting aspect, and I'm not talking up Almonty here, but there are a couple of the parties at the moment that are advanced in the tungsten space, and Almonty, of course, being the most advanced, who are going to ultimately undermine these 2 or 3 big wannabe projects, because they're going to be supplying the market. The market is not infinite, and to the victor goes the spoils. And the companies that are most advanced at the moment are going to largely preclude the development of the mammoth projects that are, like all woolly mammoths, should be in the museum. They're not going to be advancing, and we're going to be having a bunch of small brownfields out there. And none of these small brownfields are anything like Sangdong. They're much, much smaller. And as Lewis pointed out, most of the ones in the US are small-ish. And they're going to make a contribution, because definitely at $900, $800, $700 per MTU of APT, they will be profitable, and they'll be contributing, but they're not going to be contributing hundreds of thousands of tons. They're going to be producing tons, and if they're lucky, 10,000 tons. It's not that easy, and so it's a difficult space to enter. And I think we're seeing that juniors entering the space are finding, even before they've got going and started their promote, that they can't find themselves a decent asset. Because one of the big things that has not been mentioned so far is grade. Some of these projects have grades that are infinitesimal, and Lewis has spoken about the processing issues. The lower the grade goes, the more processing you've got to do to find a teacup of tungsten out of some of these mines. And that's been an ongoing problem with the big mine in the UK. Problems, grade.
Lewis did touch on grade earlier. So Lewis, if you can just touch on grade first, but then if you can follow up with, will you be interested in doing any more M&A work, or you're seeking partners here in 2026? And also, I was personally interested in whether or not you would be moving downstream here in the future.
Well, firstly, as an investor, remember, also as a company, we're quite unusual because I'm the CEO and I'm also the second largest investor in the company. So I've invested millions of dollars of my own money into this. So it's quite a rarity, if not unique, in the junior mining space. And as an investor, I always say you need 3 things in a tungsten project. You need grade, you need longevity, and you need human capital. If you have those 3 things, you have a fighting chance of being successful. If you're missing any one of those components, you're taking your chances. As for Almonty's view, we've never stopped looking at projects, even when it was not fashionable. The reason we were able to pick up what we consider to be the best projects in the States is because we cultivated a relationship with the owner in 2017. The reason we got Sangdong in 2015 was again cultivation of relationships. We never stopped looking. We still look now, and yes, we will continue to see, with now government support assisting this, we will look to where we can bring our knowledge and technologies to different jurisdictions in order to try and alleviate this supply squeeze. And bearing in mind, though, there's no project out there that's going to open in less than 7 years. I know there's someone saying next year, or it's 7 years. I mean, when you get through permits, there's all kinds of hurdles you have to get through. Even if the government is supporting you, you still need to get through in the US states, and state is different, and litigation and NGOs and all of this business. As for going downstream, we are going downstream to tungsten oxide because in South Korea, 97.4% of their oxide comes from China. You've got some of the biggest consumers of oxide in the world there, in SK and Tagutech, which is Berkshire Hathaway's company, ISCAR. It makes sense to have, I like being in a jurisdiction where I have customers on the surface. It just makes sense as a supplier that we try and be in jurisdictions where our customers are local. The government is, of course, helping us. Going further downstream is something where you go into carbide or to powders is really a conversation for the South Korean government. We would not be bringing that oxide plant into the US nor the product because there is plenty of capacity, just like in China, in the US to manufacture tungsten oxide. What they miss is raw materials. That's the missing component. So there is no tungsten oxide plant currently in South Korea, and yet they are a voracious consumer per capita of that product. So it does make some sense. But M&A, we will continue to scout and see what makes sense and that's viable. I have no interest in jumping on the junior mining bandwagon of making a story, pump it up, and get out of Dodge. I'm only interested in things that are viable, that we can sustain and succeed with over a long period of time. We like to feel that we are the last credible man standing because we take this very seriously. It means I have very few friends amongst my competitors, but what can I do? We know projects that we like. We are always working on different opportunities. Now is no different. Montana is our step into the US. Let's see what we do next.
Okay, we're going to open the floor for 10 minutes of questions. Peter, wherever you are, can you unmute and go ahead and ask your question? Thank you. And please address who you would like to answer your question with.
Hi, I'm Peter. Honestly, both of you guys are more than welcome to answer this question. You were talking about the price of tungsten and how they've skyrocketed, but however, how fast it goes up can come back down just as fast, right? So my question is, tungsten prices have skyrocketed due to the demand being greater than the supply, but it seems like price will only increase because of the military, AI, and nuclear fusion reactors demand for it. These are three massive industries that are only at the beginning of their development. How will the growth of these industries impact the price of tungsten?
Well, can I actually point out something? There's another gorilla in the room you forgot to mention, which is automotive. As interest rates come down, the car space will come definitely back into its fore. EVs are kind of getting a bit more sidelined. And traditionally, 40% of tungsten in the West is consumed in some way by automotive. So that's been very much in the doldrums since COVID, high interest rates, people aren't buying as many cars or changing their cars as often. As rates continue to come down, that will also have more of a factor. And I know Chris said what goes up comes down. It's great, but you have to consider, forget about everyone else, forget about me, forget about anything in the West. Just look to China. If we assume that China will continue to maintain price control, in the last 20 years, we had a price band of 250 to 350 for APT, which was because that was the 12 to 18% margin that the mines required when they got their subsidy from the Chinese government. The subsidy is gone now, meaning that you'll need a price band using the same calculation of between 450 and 550. So I expect my planning is I'm working now on, I mean, Sangdong was built at 300, but we were planning on 450 to 550. The current price at 1,000 may or may not stay. But when it comes down, it will never return to the levels that we saw previously if we work on the basis that Chinese mines want to maintain those same margins. So it won't be a collapse, it will be an adjustment. But believe me, at 450 to 550, you've now made, other mines more viable. But if you look historically at mines that have opened in the West and gone out of business, that's still below their unit cost, that price of 450 to 550. So, the game isn't over yet. The price will only come down if supply exceeds demand. And we're some way from that. And as I said earlier, no one really cares what the price of tungsten is. It doesn't move, it doesn't affect the prices of tools. The prices of what it's used for have not gone up in the West, even though the raw material has. The margin has not been affected proportionally by the increase of tungsten price. My customers hate it because they hate paying for anything. Anything more than free is a complete, they find disgraceful. But it's not price driven, the consumption of it. It's availability. Sorry, Chris, do you want to add?
No, I'd agree totally. I don't, when I talk about correction, I talk about correction, pulling back $100, $200 and, temporarily. The effect that always has is it cleans out the fakers. It will permanently thwart the financing ambitions of these two big Canadian projects, which I just see as woolly mammoths out there in the wilderness, wandering towards whatever fate befalls woolly mammoths. We don't have any anymore.
I've seen interest for a question from Peter Cashin and James Turnbull. You took your unmute off. Would you like to ask the next question, James?
Oh, thank you. I may have missed the answers to this question. When we talk about grade, what sort of ballpark are you really looking at? And I ask that from the perspective of we're primarily a copper miner in Utah, but we used to be a tungsten mine in the 40s. So we've been doing a little bit of work and some assays, etc., which we're sort of getting back now. Could you give me a steer on that?
Well, not all projects are equal. So you're going to have a high grade, but an unusable deposit because it has contaminants like uranium and thorium, or high levels of arsenic or the dreaded phosphorus. None of the customers can deal with that. The average grade of a tungsten mine is somewhere in the region of 0.2, 0.22% WO3.
Okay.
Now, that's at face. Then you have to factor in dilution. If you're open pit, obviously it's greater than underground, but not all things are made equal. For instance, there was a mine in Canada, in the old Canton, was 1%, couldn't make money for love of money because the unit cost of extraction was too great. So, it's not one size fits all because, of course, mining cost in Europe is half of what it is in the US, for instance. So we can work in Europe with a grade of Portugal has a low grade because it's a very old mine. It runs at about 0.14, but we can still make money. Even in a low price environment, we can make money. Whereas in the US, you really need a grade in excess of 0.35 to even stand a chance. So it's not one size fits all. Every project is unique.
Peter Cashin.
Yeah, I would go back to the point that you've got a copper mine with the tungsten, so it's a byproduct credit there.
Yeah.
So the economics are then even more maybe positive. But most of these mines do not have a byproduct credit unless it's a moly credit. We haven't mentioned moly here, but moly appears a lot with tungsten. They're sort of like sisters.
But it gets destroyed. It gets destroyed through the process. You can't have moly as a byproduct with tungsten. It doesn't extract correctly. You end up destroying the moly.
Yeah, but then if you've got zonation in the mine, you can do
that's
one
true.
or the other.
Yep.
And so tungsten mines may have moly as a follow-on, or there may be moly mines that have tungsten on a follow-on. So it's
the biggest is Sinomoly in China. They're a moly mine with tungsten as a byproduct. So they're the biggest producers of both those metals in the world. It's a CCP mine. And they produce roughly what, 10,000 tons or 15,000 tons of moly and 10,000 tons of tungsten a year.
Yeah.
Peter Cashin, I think you have a question.
I do, yeah. Thanks, Tracy. Gentlemen, I mean, Lewis, you were talking about the fact that Sangdong can potentially supply 40% of the world market of tungsten.
Non-Chinese supply.
Non-Chinese itself, but it's still an important deposit given the grade. Do you have, or have you considered assuming greater price control of moly, given the importance of the deposit, number one, from the Chinese? And how would you do this?
Well, for my sins, I'm a free market. I'm a slave to the free market. I survived that long because I embraced the free market. I never looked for any help because I knew it wasn't really going to be there, and it always ends badly. Subsidies, support, it never ends well. You have to learn to stand on your own 2 feet. I want the price to be transparent because I want a vibrant and healthy sector, because my customers, I can't produce enough material to keep all my customers in business. And if my customers die, I die. So I'm actually vested in the success of my sector, because my customers, God bless them, are complete morons when it comes to the supply chain because they never had to deal with it. They're like headless, chickens. So we have to find some level of, whether it be the G7 putting in, a floor price, and anyone who brings it in outside of that floor price into country has to pay a tariff or whatever it is. There has to be some visibility of assessment, rather than just coming up with me just supplementing what China was doing. If you want my tungsten, you've got to pay this. This to me will never end well, in my opinion. The free market bullies you into being better. That's how you survive, as long as we've done.
Better being cheaper?
Just efficiently. I mean, it's a cold and lonely place. No one's going to help you. You sink or you swim, and it's made us extraordinarily resilient now. We can take knocks from anyone, and we can stand up and dust it off. So it made us very efficient. It made us lean. It made us approach things without any entitlement that we were owed anything. It made us very good, and it's not for everyone, the free market. But I'm a big believer it's the only way we can build a supply chain. You have to make more Almontys in these critical metals if you want a reliable, dependable source of any critical metal.
No, I agree totally. We've seen this. We've seen this problem over and over again. A lot of these mid-tier and lower species in the tungsten space are looking to Washington to bail them out, to make their projects work. They have $100 million, $200 million market caps. They should be raising $30 million, $40 million. Instead, they're hanging out, hoping to get $10 million from Washington. They should be doing rights issues and financings now, even though it's going to knock their stock price, because they're obsessed, because of course they've got executive options, etc. They don't want to see their stock price damaged by financing. When you've had a market cap of $20 million for years, decades, and suddenly you see 200 million, that's the time you strike like a cobra on the market. Get yourself 50 million so that you can actually make your project advance. Just waiting for, hoping that Washington's going to give you some scrapings off the table, could mean that they're destined for the garbage heap as well.
Well, although tungsten is a fairly mature...
Sorry, Peter. We're officially at the end of our masterclass.
Okay.
So I just want to give Christopher and Lewis a minute to have closing words. Who would like to go first?
Oh, I'll follow you, Chris.
Oh, okay. No, it's an exciting time. We've waited. We've trudged across the great Gobi Desert of tungsten over 15 or more years. And now we see the oasis. And it may be hopefully more than an oasis, but a sunny upland of, the land of milk and honey for tungsten. And the good thing is, I've said that there are not many juniors in the space, is that there are not many juniors in the space. and that some of the survivors here, it's a bit like a disaster movie. A few survivors sort of crawl out of the ruins, and they're enjoying the prospect of a reward for their long-term sufferings.
Well, I like to add, in 2011, we saw the price of tungsten at 475, and everyone was in the tungsten business, and nothing from that time exists today. I very much hope that this time around we've learned some lessons. I doubt whether we have, but from our point of view, as as a company, we have a responsibility. We have a lot of knowledge and technology within the company. We intend to keep broadening our wings. We are being widely supported by multiple governments. We're going to act responsibly. And I'm going to play nice with everyone for the next 2 years while we build the supply chain. And then I'm pulling the knives back out to continue to maintain my position at the top of the pile. But I think we have to work together over the next 24 months to find really practical, real solutions that doesn't involve just taking other people's money and flushing it like last time.
I'd like to thank everybody for joining us for today's CMI Tungsten Masterclass. If you'd like more information, send me a note. Also, we will be cutting video extracts from this, and everybody who's here today will receive a copy once Lewis and Christopher have approved the content. Thank you so much for joining us.
Thank you, Tracy. Thank you.
Thank you.